Welcome back, traders. In this lesson, I want to discuss and go over the concept or discuss order blocks in further detail. And you all know what we look for as an order block. It's the, let's say, for this example, we're just going to focus on bullish order blocks. So we're looking for the last down candle before the up move, a big up move that engulfs that previous down candle or series of down candles. So we will be looking at order blocks within order blocks within order blocks, and how that stacks up and gives us a higher probability or added confluence for taking a long position. And this this kind of fits in with higher time frame analysis. So this will aid you in understanding higher time frame analysis as well. So let's jump right into it. Here we have GU on the daily. This is mostly hindsight. Well, it happened already, but I'm not going to use the replay mode because I want you to see it happening. So on the daily, we have this order block. We have this big range. Let's just use our gray color. Here we have an order block, but because this is such a big daily range, this is like 120 pips. I'm only using the top. I'm only using the wick and the wick, because that in itself gives me a range of 12 pips, which is quite nice. So, but we can take it even the first half of the order block. But the general idea is that the wick and the body close is where we want to look at price for our order block level. Jumping to the 4 hour, we can see on the 4 hour we have another order block over there. Lower time frame, so we can now take the whole body, we can take the whole candle. We see we have another order block over there. It's that last down candle before the big up movement. That black candle before all the blue candles going up. That is our order block. It's also a higher low, which is in itself something to note. Then we can also look at the 1 hour. What do we see on the 1 hour? On the 1 hour again, we have this order block that's formed over there, but we also have this one, this recent down candle before the up movement. Let's just drag that out. So now we have a daily, we have a daily, a 4H, as well as a 1H order block, all overlapping in this area. And can you see how price so perfectly comes into the highlighted area where they all overlap? That is where we have our highest probability of taking a long. That is where you can place your limit. That is where you can look for a buy and get that precision entry, stops below the order block, and take profit wherever. So that is how you can get that precision entry, by looking at that confluence of all the order blocks overlaying with each other and creating that one area of confluence. Now that we have that area, we know that we have the daily, the 4 hour, as well as the 1 hour, all aligning zones of confluence, zones of interest. I'm sure you can also get wick zones in here, but for this example, we're just going to be looking at the order block. So we know all of those zones are in there. Let's just take this out, dropping onto the 15-minute, and then the 5-minute for our entry time frame. This will touch on entry patterns, but on the 5-minute, look at this. We created a small order block over there. I'm going to zoom in. You see how price created that order block, traded out of it, and then came back, traded back into it. There's your entry. Then we created another order block with the down candle before the up movement. Take the wick. You see price coming back down towards that order block. We missed it by a few pips, so that's okay. And then see price going back all the way up. We have another order block over there. And you see how price trades into it and then expands towards the upside. Again, price creates this order block, comes back, retests it, and pushes back to the upside. If you missed that entry, there's another one. Down candle before the up movement, and you can see how price breaks it, comes back, retests it, trades into that order block, and then we see a push to the upside. All of this now, we have that order block created, expanded to this side, and you see how price drags into the zone, into this area, retests it, respects it, and then pushes towards the upside. So knowing that we entered this area, we know that we have the daily, the 4-hour, the 1-hour order block. Price moved dramatically with a strong impulse into this area. We can now start to look for signs of price returning towards the upside, because we know that if price moves very strongly in one direction on a Monday, we can anticipate price at this. We can anticipate that this, if this happens on a Monday, we can anticipate that this could potentially be the low of the week. So if this is the low of the week, we expect price to making higher lows throughout the week if we are more bullish than bearish. Looking at the daily, we know that we are bullish. We can clearly see it from this point of view. Price is moving towards the upside, so we can expect that that would be the low of the week, and we can now see price trending towards the upside and give us multiple entry opportunities. Overlaying all of these entry opportunities with time and price, that is then how we get all those entries and how we find our trades, trading the higher low every day. London open, New York open, we look for that higher low to form in our session and then take the long opportunity from that session. So just to reiterate, we have our higher time frame levels, the daily, the 4-hour, the 1-hour. We have that level, so we know the price has respected 4 time frames. On the 4 time frames, we have order blocks and zones of interest, and price has jumped right into it and rejected it. So we have a higher probability that price will move towards the upside. Now you missed maybe the first opportunity, but that's okay. You just wait for price to come back, give you a second entry. Come back, give you another entry opportunity. There's a multitude of entry opportunities, and in the entry videos you will see exactly, this will make more sense in the entry videos, but just to quickly give you an illustration, we see price breaking above this level, we break the structure, then we see the retest on the order block. Price again breaks all of this structure. That's the wrong line. Price again breaks this formation, this double top. Price breaks it in this line. Let's just use this. Price breaks this structure with this move towards the upside. Where does it come back to? Towards an order block. You'll see this pattern in the pattern and entry videos. It will make more sense, but just pay attention. Look at the lower time frames after price has reached a higher time frame level. After it reached a higher time frame level, this is then where we look for our entries. This is where we look for our consolidations. We look for our small Asian range. We look for our pushes into that order block, into that weak zones for price to go to the upside. Like this happened around New York session, but just before New York session, price pushed into this order block and we saw this massive move towards the upside. This move alone was 85 pips. That's a big move, and then that's a great intraday move that you can capitalize on and make a good percentage return on that move on that day. So I hope that makes sense, and then I hope that it will clarify order blocks a bit further. We will still discuss order blocks in more detail, and we'll say things over and over again so that it starts to make sense. And I hope that you will use this information to adjust how you look at the market and at entries. So basically, it's a break of structure and a retest of an order block, weak zone, or support and resistance. And that's how we find those entries, but more on entries later on. Just for now, just if you can just take this home, we're looking for our daily, 4 hour, 1 hour, all of those zones to overlap. We're looking for confluences on all of those time frames, and that will help us and aid us in getting a high probability trade, get us the best risk to reward, and help us to maximize on our profits. I hope this was insightful, and I hope you learned something new. See you all in the next one.